FMCG space that is holding on to that, clutching on to that shade of red at this point on BNSN lens, then today we'll zoom in on the slowdown in the FMCG space. Then host of counters in focus, the likes of HUL, Nestle, Tata Consumer are the ones that I'm talking about, because they're the ones that are also clutching onto that shade of red as well. Snehi's joining in with a roundup of what's really playing out in this space. Snehi?
So far, the Q2 numbers that we've seen from the FMCG pack, let's compare three FMCG majors, the likes of Nestle, Tata Consumer and HUL. Let's compare them across a whole brand of metrics, the likes of revenue growth, volume growth and the outlook of the management going ahead. First up, let's talk about Nestle. Versus our estimates, it's been a miss on the Q2 numbers. Revenue has grown at 1.3%, and when it comes to volume growth, though they've not specified the overall volume growth, what we know is that Maggi noodles have showed a positive volume growth, and Philip Capital is also estimating an overall volume growth, in fact a volume drop coming in of 1.5%, so that was also slightly weak coming in for Nestle this time. Margin contraction has been seen, 22.9% versus 24.3% on a year-on-year basis. If you take a look at Tata Consumers, however, slightly better review than what the peers have reported this time. Mixed set of numbers coming in, not all that to cheer about, but it's not very disappointing as well. Revenue growth has come in at 13%. The tea volumes, however, have slipped. They're down 4%. India food business volumes are up 1%, but the salt business is flat nonetheless. Margins have also seen an expansion. Lastly, let's talk about HUL. It's been an inline set of numbers, but it's been a big drop on the volume expectation, so that has been a miss. Revenue growth has been seen of 1.5%. Volume growth, the company has said that the underlying volume growth has come in at 3%. Margins have also contracted. Now let's understand the kind of commentary that we're hearing from these FMCG players on the outlook going ahead. Nestle says that commodity prices continue to remain elevated for coffee and cocoa. When it comes to Tata Consumer, they say that while rural demand is recovering, it is still not at the level that will likely give a double-digit growth in volumes. Urban demand has been soft, with food inflation being a concern. For Tata Consumers, they've also said that while they're seeing some green shoots in rural recovery, they are seeing some softening coming in on the urban front. Let's lastly also talk about what HUL's management had to say. They say that demand has remained steady, with rural continuing to grow well, whereas urban demand is seeing weakness. So sharing in that sentiment, rural is doing well, but urban is seeing some softness coming in. Urban demand is slowed down. Tier 2 and 3 cities are showing some growth, but it's the big cities that are leading this slowdown in the urban space. They've said that EBITDA will continue to be at healthy current levels. The company will also be taking a low single-digit price growth if the commodity prices remain where they are right now, and they're also saying that value growth will be ahead of volume growth from the next quarter. So a mixed set of commentary is what we've seen. The shared sentiment is that rural is picking up, urban is slowing down on the flip side, and also it's been a miss for Nestle, in line largely for HUL but miss on volumes, and a mixed set for Tata Consumers.
Thank you so much for that, Snehi, for actually putting or shedding some light on the entire FMCG space, the space, at least the companies which have come out with their earnings. Remember, today we're awaiting ITC's earnings, but the FMCG pack will be in focus through the course of the day. Also, given the fact of the earnings being a bit subdued, but when will there be a recovery in the sector? Let's visit Nikunj Dalmia's take on it.
The call you got to ask yourself is that what else could go wrong? Are there pressure points in the next 2 quarters which will have an impact on demand, which is that will inflation come back? Will there be something large in terms of a price disruption or a demand or a income, income generation which will stop? The answer to that is no. So I definitely feel that if not this quarter, the coming quarter, I think these numbers will start bottoming out, because the consumer sales always bottom out, and they're the last to bottom out, especially when it comes to categories which essentially are got to do with food, beverages and other things. So I think the slowdown has surprised us, but I remain reasonably confident because the base effect of inflation will kick in, competition is not intensifying, price wars are getting over. All that will lead to better margins and better demand vectors in coming quarters.
Alright then, let's kickstart taking all of your stock related queries, but before we do that, viewers, remember to write to us on the number that will be flashing on the top of your screens as well as on your screen shortly. That is the number that you write to us with your buy price if you're already invested in a stock, and if you're not invested in a stock, do mention the time horizon then that you have in mind. Firstly, let's
go across to our guests then who are joining us right now. Sharmila Joshi is joining us, as well as Sneha Seth, Senior Analyst at Angel One. Thank you so much for taking time out and joining us. Firstly, I'm going to come to you, Sneha. What do you make of everything that has been happening when it comes to the FMCG space? What do you make of the slowdown that is currently at play?
If you look at the market, there is some or the other sector which is, correcting. And today, I think FMGC, from long time, it has been, in the pressure. And I think looking at today's chart structure, I think there is more further pain, at least for next couple of sessions, I believe. So I think this sector, one should be avoiding, and in fact, any correction is a healthy sign, at least towards 57,800. That would be the zone wherein we should be looking at this space, as an opportunity to enter it. But as of now, I think there is further pain in this space as a whole.
Pain is reflecting in the FMCG space, and also we have to take in mind, Sneha, that the fact that the FMCG sector also saw its fair share of rally, right? And that's the reason why this sort of a correction was warranted in the space, you believe? And also, any stock that is looking attractive or has reached the attractive zone, do you think, in FMCG space?
See, at present, looking at the overall chart structure, I have no trades on this sector as a whole, like any particular counter, even I don't have it. But yes, in mid-cap stocks, I think there are few counters which are doing good. But at this point in time, the way Nifty is placed, I think, and looking at the overall F&O activity, wherein we are seeing decent writing coming in continuously in the call options, FIs have been selling continuously. So looking at the overall data, I think one should wait for, accumulating any kind of a long position or bottom fishing at this point in time. So I think there will be some further pain in overall market. So one should be waiting for a short-term trade or a positional trade for this point in time at present.
Stocks that are looking attractive at this point in time in the FMCG space. Sharmila, what's your take? Though the charts are reflecting a no-buy zone or no-go zone coming in for the FMCG sector, what's your take on this one? Because a lot of hope was riding on this entire space, right? Right from the election rally or right from the start that we saw the fact that there will be some sort of a recovery come in, the monsoon effect also will kick in. What's your take on FMCG space? Do you think it's just one or two quarter blip and the path will be better going ahead?
Yeah, so it has been surprising, and really speaking, the kind of monsoon that we had, it seemed to suggest that you would see a little bit of a pickup in the in FMCG stocks as a whole, because what we really witness of late is that it is the rural side where the volumes have not been great, and it was expected that if monsoons are good, that would have that rub-off effect and you would see a pickup in volumes there. But that, as we clearly saw in HUL numbers, doesn't seem to have happened. So I think that that is what has taken market by surprise. And if you ask me in terms of valuations, even HUL, I think, after this correction is looking good. So the key is what you're saying, like how soon do we think that we will see a recovery? So I think you need to wait it out for a quarter. Having said that, as I said, I think HUL is at an attractive level. Another stock that I do like at this level is Tata Consumer. Because, the story here is different. It's more to do with the kind of inorganic growth that, the brands that they have acquired, as well as their strategy for Starbucks going ahead, as well as their, their basket of, their range of products for the Indian market. I think that has also shown good growth and that will continue to grow. So I'm reasonably more positive there. And so, in a line, I would say that while I do like an HUL, I do like an ITC, I do like a Nestle. But I think that if you're asking me from a stock price perspective, probably, stocks like a Dabur, Tata Consumer, those probably are stocks that you should be looking at.
All right, so those are the picks coming in from the FMCG space. On that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, more on the other side, don't go anywhere.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.